Hello Wolfpack, no webcam today unfortunately. I'm about to leave for a trip and I'll be back in a few days. There'll be no videos for the next few days, just keep that in mind. And so just getting this one out very quickly before I leave. I just wanted to update you guys on the market and cover a few things just before I go so it's fresh in your memory here. We have seen a strong rejection from 20.8k. As you guys know, my buying plan involves 20.8k. I said if we see a daily candle close above 20.8k, that would be a 50% buy. You can pause and check out the three scenarios there. I have also said, however, that buying plan won't be active until after November 2nd. November 2nd is, of course, FOMC. That's the interest rate decision. And as we know on the S&P 500, for those of you who don't know, the S&P 500 has never, ever, not once, historically, bottomed out before interest rates have topped out, and interest rates of course are still rising. Therefore it's very unlikely to assume that the S&P 500 has bottomed out. In fact, there's no logical basis of an assumption on that matter at all. There is absolutely no data to suggest at all that the S&P 500 has bottomed, and so it will be going further down. Based on every single piece of historical evidence we have in the last century, it will be going further down. Whether that's invalidated or not, who knows? But the point is, you can't bet against a century of historical data. It's simply ridiculous. I mean, at least since 1970, that's when TradingView has it. It's more likely a century. And so obviously, as we know, S&P 500 and Bitcoin, they move based on the macro. If the S&P 500 goes down a lot, it's likely, it's not certain, right? It doesn't need to happen, but it's likely that Bitcoin goes down more. And this ties into the 4-year cycle theory quite a bit. We have a theory on Bitcoin. It's the 4-year cycle theory. It's a date range trend stemming from the halving, from the first halving in 2012. Therefore, it's a 10-year trend. And it basically predicts, as you can see, you can pause the video and check out the date ranges here. It predicts that we see a Q4 bottom on Bitcoin. And of course, we haven't seen a Q4 bottom yet. The bottom at this point in time is June. But based on what we just spoke about regarding the macro, we can assume that Q4 bottom will be taking place. There also is an argument to be made here on Bitcoin, okay? And I'm going to delete the chart here. There is an argument to be made that we're seeing a very similar thing to what we saw in 2018. Okay, horizontal support line. And then downtrending line, it's like a symmetrical, it's like a descending triangle formation, right? There is this argument that some people have been making. I don't know how I feel about it personally, but it is certainly there, right? There's quite a lot of data that kind of suggests that we're seeing something very similar to 2018, and then we'll see one more final capitulation, before bottoming out, and that capitulation could take us to 13k or 11k, somewhere in this support region that is defined by the previous bear market, somewhere like that, right? That is possible as well. So the structure itself is actually not very good. It's a structure that resembles quite heavily what happened in 2018. And if you're looking at structure in the S&P 500 as well, the structure in the S&P 500 very much resembles what happened. I'm not going to go back and actually, let's just go all the way back and take a look here. It resembles quite heavily what happened here in 2008, and it also resembles quite heavily what happened in the dot-com bubble as well in 2001. Okay, if you zoom out, you can see that bear market structure is quite similar. So not only is Bitcoin reflecting structure from previous bear markets, it doesn't look promising, and S&P 500 is as well, which of course is one of the probably the biggest name in traditional markets. Nasdaq's another one, and they're both doing the same thing. So I'm not saying Bitcoin's going to go down dramatically further. I'm not saying it's going to see something similar to what it did in 2018, but I am saying that at this point in time, it does still seem unlikely to me that the bottom is in, and that's based on more than just the date range trend. It's actually based on the structure of the markets itself. Yeah, look, if you want to do it on the hourly chart as well, and this is something interesting for those of you interested in short-term trades, hourly chart, you can go in and draw this downtrending resistance line. If we break that resistance line on the hourly chart, you'll probably see another swing back up to 20.8k, through which I'd expect a double top formation, possibly a scam pump. As I said, I'm not willing to buy on that buying plan until November 2nd, after FOMC. And so it is possible we do see some scam pumps until that point. That might not be substantiated after the release, but that is a short-term trade signal there. Very simple stuff, obviously. It's just a downtrending line, but it is prominent nevertheless. I want to briefly interrupt this video to talk about the BitGet exchange. Now, the BitGet exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Megawell Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks guys for watching the advertisements. Let's get back into the video. And then we've also got support at 19.6k, which is worth watching on the short term. And another thing worth watching on the daily chart, and this is one of the reasons why I'm not too confident in buying upon a break above 20.8k right now, is because if we break 20.8k, we're still just heading straight into another thick resistance zone. We have the bull market support band there, which is going to be rejecting us basically instantly off of the breakout. Another thing that's worth noting here on the markets in general is that not only is Bitcoin at resistance, and this is going into my lack of confidence in Bitcoin right now, not only is Bitcoin at resistance, we're also seeing Ethereum. Yeah, Ethereum's broken out, but it's broken out right into a major red resistance box between around 1,580 and 1,700. And on top of that resistance box, we're also seeing the bull market support band layered on top of that. So we're seeing a harsh rejection from that region on Ethereum. And total cryptocurrency market cap's a similar story. Yeah, we've seen a breakout on the RSI. We've seen a breakout in this line stemming from August here. But, we've broken out and we've headed right into another resistance. And in fact, it's a very compiled resistance here. We've got bull market support band. We've got a horizontal line at 965 billion. We've also got a downtrending line stemming from November. And on top of that, we've also got an uptrending line stemming from June, all of which in the same region. We're seeing 4 separate resistance zones, one of which being a dynamic moving average, 2 of which being diagonal, 1 of which being horizontal, all of which are rejecting quite heavily from the total cryptocurrency market cap. So, you can see quite clearly here why I'm not interested in buying Bitcoin right now. It just doesn't seem like a good time. There's so much resistance overhead, like ridiculous amount of resistance overhead. And there's not really any clear definitive evidence to actually tell us that the bottom is in. As of right now, I'm just seeing a bunch of repeating structures. I'm seeing a bunch of bearish resistance, and I'm seeing a big event coming up in 4 or 5 days here, FOMC, which has led the market, by the way, into a period of historically low, consolidation. Actually, the correct way to say that would be historically low volatility in regards to traditional markets. Bitcoin, since around June, okay, but more specifically, since around early September, has been less volatile than the NASDAQ. That is crazy, because what do you think about Bitcoin? What do people think about Bitcoin? They think, it's very volatile, it's very unsafe. It's been less volatile than the NASDAQ. That doesn't happen for no reason. It happens because something big is coming. We go to the 3-day Bollinger Bands, we delete everything on this chart, and we check out what's going on here. Let's bring it up. We can see that on the Bollinger Bands, Bitcoin currently is the most compressed, right? Objectively speaking. It is the most compressed that we have seen since July 2020. For 2.5 years, Bitcoin has not been this compressed. That generally means there is a big move on the way. And when you're talking about a structure that is similar to 2018, like what I brought up before, a descending triangle formation, right? And depending on how you draw it, it's broken out, whatever. The point is, it is still similar. It's still a similar structure. This could be a fake out driven by FOMC. We don't know. You could draw it differently. It could be a different chart, etc. If you go to logarithmic, it still stands. All right, the point is, when you're seeing historically low volatility, historically high compression, and a structure that matches what we've seen in previous bear markets pretty closely on both Bitcoin and on the S&P, it's not the time to be buying. It's really that simple, guys. So I don't know. That's my opinion on Bitcoin. Again, if we break past FOMC, I should be arriving back the day before FOMC or the day of FOMC. So I should be able to give you guys an update before it happens, thankfully. So you shouldn't have to worry about it there. But if we do break past FOMC and we do see a relatively bullish rate hike of 50 basis points instead of 75, even if we see 75 and we do sustain above 20.8k and we start to see some good, breakouts here on Ethereum past this red box and a breakout here in the total cryptocurrency market cap, then we'll start buying, of course, because the buying plan, I do still see, regardless of everything I said here, I do still see the buying plan as very valid. I do see it as very, prominent and very valid and one of the best ways you can get a good average price on Bitcoin. I just think it should be put on pause for a while, right? I just don't think you should be doing it going into FOMC with all of this stuff going on in the market. Now, you guys can do with that what you will. I'm not saying you guys can't do it. You guys are free to make your own personal decisions. That's what I'm doing. So, based on your personal risk tolerance, you can do whatever you want. But that's what I'm doing, guys. So yeah, that's the video, guys. I won't be here for a few days, as I said before. Again, I'm going on a little trip for a few days. I'll be back the day before FOMC. So take care of the market for me, and I'll try my best to be semi-active in the Telegram discussion group. But I'm not, no promises there. Regardless, see you guys with a video the day before FOMC. Take care of the market for me. Catch you later. Bye.